And good morning, everybody. Good morning. This is Marziti here. We are starting our prep session following signets here on the bullish bears. Starting a few minutes early, pardon, because we've got in 10 minutes a bunch, two relatively um, big reports going on here. Let's take a look here. We've got at 8:30 jobless. Jobless is a big one now with the whole interest rate deal because of, they feel that the inflation numbers are moving in the right direction. So their second mandate is full employment. So that's a big to-do number that we're expecting today. And then we've got CPI. Now, CPI, we got to remember that CPI is actually manipulated a little bit. It's still a very important number, but you've got CPI with things like energy, CPI without energy, different things like that. So, excuse me, it could go, any kind of a way. We're going to talk a little bit about that. I am going to stress one major point, and that is get out of the way of this trade. Do not be in a trade at 8:30 unless that is your actual strategy. Because this thing, we have no idea where it's going to go. And it can be very, very violent as far as the way the price moves. I've seen these kind of reports move the ES 100 points at one time, within a 1 minute candle. So be out of the way of that. Other things, though, between the morning leading up to the 11 o'clock era timing, we've got some Fed speak going on. They did release their minutes yesterday, so they'll probably respond to some of that. And we did see in the minutes that there was a little bit of dissension between everybody. There was some dissension in the FOMC group. They were not unanimous, and Powell had to make his final call on how all that went. So let's be very much aware of stuff like that. Now, let's get into this chart. First of all, quick summary. We see a lot of tighter ADRs. We see all the pivot points are green, telling us they're tighter. That means that the goalposts between pivot points have been moved inwards, which means they're easier to hit. We see that there is, among the major players, including, the NASDAQ. I mostly focus here on the top, but that's, the NASDAQ and the ES are going to be highly correlated. We don't see anybody with a high IV this morning, meaning they're not really moving right now. Everybody's quiet. Everybody's holding their breath, waiting for that report in a little over 5 minutes. Now, let's talk about who moves, first of all, and then we're going to go over and zoom in on the ES. Crude is, the big ones that are going to move, obviously, are going to be the ES, the NASDAQ, gold to some extent, and crude is going to be in last place, generally speaking, as far as how big the move is. Crude is more international, and while gold is fairly international, it's heavily correlated with the ES and the NASDAQ. So I think my anticipation is that crude is going to be going to react the least of all of these, then gold, and the biggest reactions will come from the ES and the NASDAQ. So what I want to do right now is let's go in, and like I said, we've got about 5 minutes. Let's go in and look at where this thing can go. I'm going to draw this up now just for reference. White lines are pivot points. The red dotted lines are ADRs. That's a half ADR below, a half ADR above. The heavy dotted lines are full ADR move. Then we have these solid green lines. That's a pivot point support, support, support down there. The red ones above, solid lines, are resistance. Okay. Let's start by putting some targets. And there's no guarantee. Now, we can say a lot of people mark by wicks, and that's fine. But what we want to see in these kind of things is the more touches that we can make with this. So I've got 1 wick, 2 wick, 3 wick. So, okay. If I go from here, let's say, to here, you can see we're kind of chopping. Let's just zoom in on that. See this? It comes to the pivot point, or to the trend line. It comes down, it goes up, it goes down, it goes up. It's on a decision point. It's, this is a decision point. All right? So, we do have, obviously you can see this whole thing's telling us we're coming into a tight pennant to the tip here, or a wedge. And that, is more the case for an explosive movement. Now, oftentimes when we see these wedges up, the break is south. I'm not telling you to trade that. Do not necessarily. I'm telling you to stay out of this trade altogether. These kind of trades can blow through your stops so fast and so far that you won't even see it coming. You got to remember, a stop is a market order, which puts you in queue for your order to be executed. And a stop is a market order, puts you in queue, and you could fall in the back of the queue, and the price just keeps moving and moving, and you haven't gotten your order filled yet until you get up and it's time to place your stop, your market order, but prices continue to move in the meantime. So you have no idea where you're going to get filled when you have a violent reaction like that. So it can get overshot quickly. So get out of this trade right now. You got a minute and a half or something like that if you're in any kind of a trade right now and you do not have an actual plan on how to trade this and in experience. However, this suggests we're going to go down. Ultimately, targets would be this low here on the ES around 57.78. We've got a target down here, 57.35. You say, wait a minute. We're at 58.40. Could we honestly go? Yeah, we can. Yeah, we can. We do have this little bit of a pullback area right here, and this thing's probably going to trigger while I'm talking. You see this kind of zone right here where we went up, we went down, we went up. It basically was a box. High, low, 50% retrace formed a box. That makes for a very good target. We see this zone down here. Maybe, if I can get the tool to work. This is a consolidation zone down here. You say, well, Marziti, what if we go north? Where could we go north? All right, we don't have any targets up here except that we do have ADRs and we have support and pivot points. The highest pivot point being up here at 59.27. Another way to calculate, well, let's just see. Like I said, this is getting ready to trigger any second now. So, if we move a full ADR, we're going to look at 58.94-ish, 58.93-ish. And here comes the report. Let's go to the, well, I'm on the hourly. Wow. Wow. Let's go to the 1 minute. Go away. What was it? CPI, consumer prices, 0.3 was forecast at 0.2. So we're basically saying prices did go up. All right. What's the range of this candle so far? The range of this candle is 27.5 points. So call it a 30-point move. Where did we hit? We hit the central pivot point. Let's back out a little bit more. We talked about this range down here. We have not hit it yet. Let me move that over so we can actually see what's going on. There we are. Now let's zoom in on this a little bit. All right, what did it take out? Now, first of all, what does this candle mean? It means institutions did not agree. Institutions did not agree on how they were going to trade the report. Remember, when these kind of candles come out, all the institutions have got a big trade planned. Now, they're competitors, so they don't share their plan with their competitors, but they all kind of agree on the time. And so at the time, all their orders trigger. If all of them or most of them are generally coincidentally in agreement on the direction of the trade, say they were all bullish, well, then the candle just takes off like a rocket in one direction and doesn't look back. If they're all bearish, it starts plummeting. But if they are in disagreement, some think bullish, some think bearish, and when all their orders hit, this is what you see. It goes up, it goes down, it comes back. This is going to most likely finish right back on this trend line. So this tells us that the institutions did not agree. Now, to be quite honest, we didn't really hit many targets here. That was kind of surprising. I was a little surprised on that. But let's just go see. Let's move to the 5-minute so that we can see, well, what did it take out? And there, come here. Zoom. There. It took out, well, for one thing, it had the pivot point, and right there was your target. Right there. That low. Why that low? Okay, well, let's understand what happened here. A lot of people were selling. And then all of a sudden, price took off the other way. Let's zoom in on that. So what do we see here? A lot of people sell, 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 sell. Well, price turns around. Well, that means that we talk about liquidity all the time. These people, there's a bunch of people who went short here, and the price, though, turned around on them, which means they're losing money. They are losing money because they're short, and the price went this way, went north instead. Now, they could have all gotten out and taken their losses along here. We don't always know that. But this candle came down, took out this low. So all these people that were short, or excuse me, all these people that were short, they were able to get back out of their trades. Now, of course, people also went long on this candle because obviously we see it turned around. So their stops would be right here. So this comes in, took out all their stops. The people that were short were able to get out of their trade, and this balances the books as far as wiping everything out. So that's a liquidity run, and that's what happens here. Okay, so where do we go from here? That's our next question. All right, well, actually, let me back out. Let's zoom in a little bit on the chart. I want to bring this back over here. Wait, before we do that, let's just kind of look at the big picture. notice right here yesterday. Now, okay, yeah, we had a lot of movement yesterday, and we kind of formed a box right here. Here's yesterday's high, here's yesterday's low. Let's put a box there and look at how that how that played out. Here to up here. Well, there you go. Yesterday, this wasn't yesterday's low, obviously, but that was that point, liquidity point. Here's yesterday's high. We stayed in this box over and over and over, and all that we did was, now notice, we did not close outside of the box. We didn't close outside of it. That is very important. Why? Well, because there was no continuation in the move. First of all, you have to close. Let me back up. When we see this run outside of the box, as we said, this was all about a liquidity raid on that candle back over here. That's all it was. It was a liquidity raid on that candle right there. Once they got their liquidity, now they're going back the other way. See? They went down, they came back in. Now, not to say that they still can't go down, not to say that, but essentially it is moving, it's grabbed liquidity, people started going back up, people bought right here, people bought. Obviously, some people shorted, so we had both buyers and sellers right here. The sellers right now are losing. But if they can drive that price back down here, so if they can continue to push it short, great for them. The buyers came back up in here. They're probably looking for a halfback trade. They may be getting out of it already. But the point is, no close outside of the box. So this is a liquidity run for now. So we'll say, well, okay, what do you do with that? Generally speaking, if the reaction we wicked out of the box, we went back inside the box. Now, if I get some candles back inside this box here inside, and especially if we go back to 50%, then I just make the box bigger. That's all. I just make the box bigger. That's all we're looking for. The box we'll just expand it, and that will become our new trading zone. On the other hand, had this candle closed outside of the box, and then the next candle had continued the downward press, that would be an entry for a short. And then, well, how far would it run? At least half. This box is what you call your measured move. So we can expect, had it closed and then the next candle continued, we could have expected at least a 50% move of this box down. So just making up some numbers here, let's just say, well, actually, let's just get the numbers. So this box went from around 58.20-ish to 58.45, giving us a 25-point range is the box. So that being the case, we'd call that, say, 12, 13 points. So we could expect the move to go at least 12 to 13 points, possibly all 25 points, but a pretty good probability of that 12 to 13. So, like I said, we want to stay out. Notice, though, again, if you don't know where you're going, the challenge is says, well, I'm going to trade it short here. I think it's going to go short. The problem is your stops would have to be up here. If your stop had been the high of this candle going into the thing, well, of course, you were stopped out. If your stops had been back here, well, let's just take a look at where that is, where that would have been. The candle triggered around, we'll say 58.36, and your stop would have had to been 58.43. 7 points. 36.43. Yeah, 7 points. Do you really want to put? You could. Depends. Depends on your trading, your trading plan, and you still would have gotten stopped out. As you look right here, you still would have gotten stopped out and taken the loss. You say, well, I should put it back here. All right, we said this was around 35. This here's 46, so 11, 12-point stop. Now we're getting to way too much. So you see what I'm saying? That's why we just don't trade these kind of things. You'd have to have an incredibly large stop. Notice here, we did wick out. We did go back inside the box. So at this point, I'm going to edit this box. Whoops, not edit, activate. I'm going to bring it down to this candle with the 3 on it. Well, why aren't you doing this one here? Well, this candle's not closed yet, so I don't know what it's going to do. This candle's not closed yet, so I can't mark that one. Well, shouldn't I go short there? Well, you could. But it closed outside of, it continued the run. Yeah, but look, this candle came down, then it went way back inside, and then came back down. That tells me to reset the box. And right now, all we're seeing is a continual wick. You say, well, it is continuing bearish. Well, it's pushing that way, but that's not a confirmation trend yet. You say, well, what are we supposed to do? We wait for a setup to actually happen. Well, what kind of a setup are we waiting for? Well, I'm waiting for, if I were going to trade this, I got a fair value gap right here. We did come back up, but this candle has not gone back to the fair value gap. There's just no trade here yet. Now, if this candle goes back in here and then comes back out, closes, and continues, could this continue and just walk slowly like it did yesterday, just continue to walk and the box trigger setup never trades? Absolutely. It could do that and the box setup never triggers. We say, okay, then what could we do? Well, let's go back and look at price action from what's happened in the past. All right, now I'm going to clear the chart. We've obviously broken this trend line, so I'm not that concerned. You know what? I'm not going to do it that way. Let's just first of all get rid of this box. Remove that box. And study-wise, let's just remove all studies for a moment. Okay. Let's go to the 15. We like to look for our trade setups on a higher time frame. Look for the entry on the lower. Okay. What are we doing right now? We are filling all of this. Where is a good target? Obviously now we're on the 15. This little grouping right here. That is a target right there. We do have a fair value gap right here. We have just about completely, well, we have mitigated it or filled it. So yeah, okay, so this is essentially filled. And now that tells us, okay, well, what does that mean? Well, that tells us we could now, if there were a bunch of orders sitting here, we could go back up to the north. If you were trading a fair value gap strategy, you would be long by now, looking to go at least 50%. And I think a 50% retrace is very plausible here, putting us at about 58.29-ish. I think it's very plausible that we could go back to around 58.29-ish. From there, what? All right, see this grouping here, this grouping here. What is that? That is a chop zone. That's a no trade zone. As far as taking, it makes for a good target. Blue. I like blue for my chop zones. This actually, but this was not a fair value gap. I got that colored wrong. Let's change your color. These make for great targets, but they, that's bright. They make for great targets, but they don't make for good places to get into an entry necessarily unless you have a strategy revolving around that. So if we're going back north, I think going right, towards these guys here, heading back into this zone. Matter of fact, this blue box needs to be expanded to encompass that. So I think that would make a good north target if you think that we're going north. On the other hand, we have hit this fair value gap. If we roll over, this is our next target down south in the short term. Why? Well, there's nothing else. I mean, there's really, as far as, you say, well, you got all these little, no, these don't count. They're not significant. These are just continuation candles. These are not standout wicks to the downside. This is a standout wick. These are not. So I don't consider these, you say, well, it's going to take liquidity. No, there's another wick right beside it, so close. Well, which one? You see what I'm saying? So we're looking for wicks that stand out, like this one. All right, so we say, well, what are our targets down? Our target down is this consolidation zone right here. How big should you draw a consolidation zone? You basically want to draw the height and the width, the thickness of it or whatever, so that you catch about 80 to 90% of the candle bar, not necessarily the wicks. I really don't care about the wicks. I want to catch about 80% of this from top to bottom. You could mark it so that it captures all of them, and that's fine. So I could mark this like up here, a little bit more on the left, a little bit more down on the right, and that captures all the candle bodies in that zone. Some people will mark the wicks. You just have to experiment with it and see what works with your trading strategy. Some people just kind of mark the middle 50%. That's fine too. Okay. So anyway, but what I do see is, and this is going to be bright, sorry, but what I do see is this little grouping right here. And so I would say that if price were to come back down towards this, it would target at least the top of this grouping. It may go deeper into it, but you'll see that it'll probably wick into this grouping and then it'll react. These little groupings are significant. Always watch for these. Here's a little grouping followed by, we picked this zone because we see that price continues to hang out here. I've talked about before, we do not initiate a trade. We don't start a trade in here unless that's your strategy, but we target it as far as being in a trade. All right. So there's a workup of the ES. So let's talk about, well, what happens now as far as, well, the 930 open and all that. Generally, after we have a big candle move, we can expect either a lot of sideways chop inside this candle, inside the body of this candle. We can expect it to choppity, 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 chop around here. That's one very common thing that we see. Why? Because the institutions spent all their money to make this move, and it failed. They made some money, hopefully, but, I guess, maybe, I don't know. They made some money. Well, they've spent all the money that they can allocate for the day in many cases, and so they just continue to chop and chop and chop. And so they're just making little moves for the rest of the day. So consolidation follows big moves very commonly. Same thing you can see here. Here was a big move up, and then we consolidate, 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 saving our money for the move. The other thing that we could expect, and of course now, had this candle had run away to the south, then, all bets are off and they can just continue to throw money at it, throw money at it, throw money at it, and so on. Didn't happen. Didn't happen. So we may do a slow trend up or down. I think more than likely we're going to stay in this range today. Now, again, this range is roughly 30 points wide. So, that's a pretty good range. So now that this move has happened, implied volatility has plummeted, we're back down to normal. Okay. So let's talk about the morning trade and just kind of see. Let's pop over to Edgeful and look at anything that it could give us some insights on. Now, again, the thing to say was, well, how accurate or valid is Edgeful going to be today with this move? And that's a, very, very valid point. A lot of the Edgeful is based on averages. Edgeful is based on averages. Today is not average because of a big report. So we can still kind of look and get some ideas, though, that may give us some insight. We'll see. So we're going to look at the ES futures, and we're going to talk about the orb. We're going to set that to the regular trading hours open. We're going to go to Wednesday, and we're going to set this for the first 30 minutes. Okay. So looking at Edgeful here, if you have a breakdown where they're basically saying the biggest number of the three, obviously it says here that breakdowns are more productive. So when we get to the 9:30 open, and we're looking at the 9:30 to 10, we're going to look at the high, the low of the 9:30 to 10 a.m. spot. And if it does break south, we've got a little bit of an edge saying that it will not cross back up and take out the orb high. Now, it can go back inside the orb, but they're basically said there's a slight edge that it will not take out the high if it breaks down. Now, on the other hand, if it breaks up, not a very good strategy there, not a very good statistic saying that it won't go and come back and flip on us. Obviously, we see we've got a 30%, 1/3 chance. So the only thing here as far as using the orb strategy to consider is we've got a little bit of an edge if after 10 o'clock Eastern, the ES, which would include the SPY, if it breaks out south of that orb, we've got a little bit of an edge that it will continue, or at least, stay more to the south. If we tighten it up to the first 15 minutes, we see we have a much greater chance of a double break. So that would be from 9:30 to 9:45. So let's put those two together. So that would really tell us, that kind of tells us that the 9:30 to 9:45 can be a little bit more violent, which tells us we need to wait until 10 o'clock. Meaning that, now one of the things you can do if you've got a double break is that if it does break to one side, and we've got a 61, almost 62% chance of a double break, you could say I could reverse trade it back towards the middle of the orb, possibly the far side. That is a trade you could look for. So from 9:30 to 9:45, we say, okay, it broke north, and now I see it's turning, and it's headed back south. You could take that trade south, targeting the middle of the orb or the bottom of the orb as targets. The advantage to that is that you would have a fairly tight stop, because your stop then would be at the top, the high of the day kind of thing. You know exactly where your stop should go. Same thing if it broke south first, you start to see it turning back north. You can go long with your stop at the low of the morning session. But again, remember, all statistics fail sometimes. I don't care if it says 100%. We had very high probabilities Monday and Tuesday about the SPY gap trade. In fact, Monday said 100% and it still failed. So you got to remember that they're, for one thing, they're only sampling 6 months, or at least that's how I had it set. You know, if I went to a 5-year sample, it probably would not have said 100%, you know, kind of thing. Anyway, all right. Nonetheless, we do have a little bit of an edge to the south. So there's a couple trade ideas that you could do on the orb. Now, looking at things like market session correlation, throw it out the window. Today, because regardless of how the Asian session finished, because of the candle that we've had right now, it doesn't matter. When we have these big reports, they're going to change everything out. They're going to change the dynamics. So throw this market correlation out the window today. So the only thing that we really got to talk about today is the orb. I think that's the best thing to go with. The SPY gap. Let's go back over and look at that. There's not one necessarily. Maybe. Let's go back and look at that. Let me maximize that. Let's put a line in here. It's not what I want. I want this. SPY closed here. Okay. Right now, nope, I didn't want that. That's not what I wanted. Come on. Auto zoom. Let me just make sure that my chart is correct. Okay. So SPY closed here around 577. Currently we're at 575. Is this a good gap trade today? No. Why not? Because of the big report has changed all the dynamics. It has changed all the dynamics today. Now, I'm not saying you couldn't take the trade. We'll go look at the statistics just to say, but again, I'm not very excited about this trade today. I think we have to wait until regular market open and just see what happens. Gap fill on the SPY using the last 6 months by today, Wednesday, and we see they say that when it opens at 9:30 Eastern, currently we're in a gap down, that there's an 80% chance that it will close. Now, I think, is it going to retrace? Yes. Will it, we've still got 30 minutes, so things could change. We don't know. But the main thing to understand is, because of the event today, I'm not convinced that I'd say, well, I've got an 80% certainty on that SPY close today. I'd say, yeah, I think we could probably get a good percentage of it to be closed, but I'm not going to say 100% of it at this time. You could certainly at market open pick up some SPYs or some 0 DTEs or whatever and see where it goes for the first few moments. I think within the first hour it's either going to happen or it's, you'll know what's happening within the first 30 minutes to an hour. or you can trade, as far as the ES, if you wanted to go long on the ES. One of the things that you can also do if you'd like to trade these SPY gap fills, this is the time to go long on the ES, be it the ES or options on the ES, because unless we're going to continue going south, you've got a good distance between the put us right about here, and that says it has SPY. No,